Welcome to readtheticket.com. Today we're going to investigate the Jesse Livermore trading signal. The reference is a website called jesselivermore.com trading signal. Richard Wyckoff published his interview with Jesse Livermore in a book called Jesse Livermore Methods of Trading in Stocks by Windsor Books. Now it's important to note that when you understand and read Livermore, you realise that Richard Wyckoff relied a lot on what Livermore gave him. It's very similar. Okay. Here we have the website, Jesse Livermore. The page is Trading Signals. It's on the menu on the left. Where is it? Somewhere down here. There we are, Trading Signals. What this page suggests is that Livermore was a breakout trader. He would look for to price the return to a previous strong support or resistance, and he would look for the opportunity to go down, look for the opportunity to go up. And after it broke down, so this point here, the breakout where he's got the side breakout, that is actually the pivot point. You would want to see price move down with normal reactions with good volume. Here's the pivot point again. He had to break up, and you want to see price move up with good normal reactions and good volume. It's important to note that in Livermore day, it was well known that insider trading was fairly popular and not that well regulated. So the environment is obviously not the same today. Well, you hope not. It's important to note that Livermore studied fundamentals. He studied volume and price action. He did not use charts. He used prices and volumes on the tape. He may have hand-drawn charts, but when the action's going down, I understand it was purely the tape. After all, charts weren't really available back in those days. So what Richard Wyckoff took from his learnings from Livermore is that price has a manner and form when it's behaving normally. For example, when it's going up, you have larger volume on the upswing and smaller volume on the downswing, and prices advance. So price and volume have a relationship when prices are moving away, or the markup process. Take a look at this page, have a bit of a read through it. It's pretty good, but I do recommend getting Jesse Livermore's Methods of Trading in Stocks by Richard Wyckoff. Much more detail on that. Okay. So look at an example. Right now, GLD, gold, is at the pivot point. And as you can see from my main chart, it's on pretty good support, around 112. This is the GLD, this is the ETF. Now the question is, are we going to get a breakdown? Or is it going to settle and move up? The truth is, you don't know until price tells you. And when price does move, you want volume to support it. In the manner which Livermore said, you want good normal reactions where you have high volume on the upswing and low volume on the downswing, and more volume on the upswing if the prices would not move. If it's a downswing, where you want more volume on the downswing and low volume on the upswing. So price and volume are very important in Livermore's world. Using some of our own studies, gold has a well-defined cycle. It's been working for some time, and the cycle's only been broken, or where prices sort of diverged only a few times. For example, a very bullish divergence here where price did not sink on this downswing. Pretty much every time price worked pretty good. This particular time, price did not rally on the upswing. Very bullish breakout here and a very bearish breakdown here where the cycle was broken. The cycle sort of took a while to settle down here, but it's come back, and you see we're actually at a zone where we would actually be testing the cycle to see if it maintains its form. Doesn't mean price can't go lower. To take out that low, form a spring, a quick sharp move down, break the stops, and a sharp move back up would be a spring. Obviously, if it keeps on going down, it will end up breaking the cycle. Some of our volume indicators suggest that there is no buying going on. We had a bit of an upswing here. The price moved up here, but the volume wasn't strong enough to change the trend. I'll just use my Wyckoff reminder. For example, we've got prices come down to test support. We're expecting a spring to get some sort of action here. We want to see a change of behavior from selling to buying. We want to see good effort versus results. We want to see how well price moves away from the support if we are bullish. But you must say the path of least resistance is still down. We also want to consider test of high volume price events. If I scroll down to the accumulation, for example, here we are here. This is the Wyckoff accumulation phase. Selling climax, a test of support. This is for we get a double top or triple bottom. We may just get a test of support where it just goes up and comes back down again to get a triple bottom. So at the moment we're trying to see if support actually holds. Of course, we may get a more violent break of resistance. We might just go down for some time and just muggle around and before it goes back up. So we don't really know what sort of break we're going to get, if at all. The point is, if you want to be long, you don't want to be early. You want price action and volume action to show you that there's a change of behavior. You want to see that the market has changed and institutions and heavy money managers are working to buy this back if you're bullish. Okay, another chart of interest. This is one. I'm an amateur Elliott Wave sort of student. I don't really work it that hard on the site, but when it's obvious, it's good to know. Here we have our buying climax. Probably say it's our wave 1 there. I mean, if you're wave 2, wave 3, wave 4. We have an ABC up, ABC, and we have an ABC down. The question is, does this ABC break into a 5 waves down? It goes up for a 4 and it comes all the way down to 5. Or is this the end of it? And this is the 5. So therefore it's a 5th wave failure if it turns around here. Well, the 5 may extend. And as you can see, if you look closely, price has been working pretty much well within these 5 Yanaki arcs. So we're on an arc here and it stopped, arc there and it stopped, arc there and it stopped. Didn't stop there, so that's a bit of a fail. But so that's not too bad, though. We had success, 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 success. So that's 1, 2, 3, 4. 5th was a failure, and now we're pausing. Oh, my God, arc stopped up there. So there's a gain angle, you can't really see it, but it comes down to below here, which is about 105. So there's another arc at 105. Like in all popular trends, and everyone's following it, there is a moment in trend reversals is that price extends into to a mode where it actually causes everyone to panic, to actually sell. We might have thought this was the panic sell down here, but it might just go a little bit further and really test those gold bulls out there. What to look for if you are bullish is a power buy. What I call a power buy is where it goes smashing down here and it goes smashing back up. That is good response that the buyers are just waiting to feed on selling down here. Once again, it's also the new year. Everyone's on holiday, or the main players out and away, so unfortunately whatever happens the next couple of weeks is can either be a play by the big boys because no one's around, or it can be just a head fake. So you have to unfortunately, it's going to be quite difficult to see what actually goes on. But there's no problem in buying this like above 125. So it means it's had a good move up, a bounce, and a big as the trend if the volume is there. Can this go to 100 or 105? Yes, it can. Have to wait and see. Thanks for watching.